Hey everyone, my name is Mike Marshall. I am on the Benzinga product and sales team over here.
You would be.
I would be, absolutely. I am sitting here with the one, the only Brent Slava.
That's me.
Brent, besides taking out the trash and
Doing the dishes.
what do you do here?
All right, so I'm one of the handy-dandy, trusty Benzinga Pro news reporters that is working around the clock, not literally around the clock, but for quite a long time each day. I'm reading tons of sources. I'm reading a ton of press releases, SEC filings, looking at other publications, and what we're trying to do is condense a lot of information that is coming into the market, the stock market, and impacting stocks. And we're trying to reduce some of the noise out. We want to get you only the most important headlines that are impacting stocks. That's what's happening on Benzinga Pro, and that's kind of what I do on a daily basis.
Excellent. So we started to put together this webinar series where we're kind of going over some of the basics to trading and investing, and that mainly came from a lot of the retail side traders that are on our platform. They were telling us they wanted a little more information, a little more education, and so a lot of these topics are coming directly from you listeners, from you users on Benzinga Pro. And kind of guiding us to what you're looking to either do on the platform or to learn about. So continue those questions coming in. We love them. We love the feedback. And we really appreciate all of you guys here with us today.
Awesome. So, maybe like real quick, let's talk a little bit about why listeners out there should be sort of understanding, sort of wanting to get some education from us. What do we sort of bring to the table? So I've been doing the stock market thing. I've been doing this news thing for about 10 years now. I've been doing pretty much exactly this kind of work for that long, where again, I am reading a ton of sources and trying to reduce that down into the most meaningful stuff. I know when a stock is moving, why it's moving. If I don't know that, then I'm pretty much out of a job. So if at any point during, I was going to put this challenge out there, at any point during the webinar, if you want to just throw in a ticker, I'll tell you why it's moving, but we shouldn't do that here. We got to focus on swing trading today, Mike.
Excellent. So yeah, what we're going to do is we're going to go over, how to swing trade, a few different type of positions, how to get in, how to get out, and then talk about some different resources that are out there and potentially what to look for when taking a position. Is there anything else that you want to talk about as far as like an overview before we dive in here?
So just quick overview of the workshop that we're doing. On the left side of the screen, we got a little presentation going. It's just something to follow along with, something to draw your eyes to. Also on the right side, this is what Mike and I use all day, every day to get our information. This is Benzinga Pro. This is our real-time breaking news platform. There's a ton of different uses for it. We're only going to touch on a few of those uses today. And what we're going to do, just a general sort of outline of the workshop, we're going to take you through the presentation. We're going to give you a lot of education. And then at the end, we're going to use Benzinga Pro for a couple ways on sort of like how you can understand if you might be a swing trader.
Absolutely. And if you guys want to, you can sign up for a free trial of the Benzinga Pro platform. Andrew on our team is going to go ahead and drop in a link to the chat right now so you guys can sign up. If you guys do have any issues signing up for the trial, feel free to email Andrew and he'll get you all good to go. So he will give you his email as well. So here we go. We're about to get started here. So Brent, go ahead and lead us off.
All right. So why don't we start with a quick overview of what is swing trading. So swing trading, and we will contrast swing trading to the other two sort of types of trading, day trading and longer term investing in just a second here. First, let's start off with pretty strictly what is it. So a swing trader isn't going to have a position longer than 10 days and probably won't have a position for just one day. If they're just trading a position for one day, you kind of consider them a day trader. Swing trading, a couple characteristics of swing trading that are pretty important. Swing trading combines technical analysis with fundamental analysis. Swing traders are using a lot of charts. They're looking at a lot of charts, and most importantly, they are trying to define a trend. What do you think about that stuff so far, Mike?
I'm following.
Pretty easy so far. One thing that I like to think about when I'm thinking about, you know, sort of what is a swing trader, who are swing traders, is this saying that kind of goes around Wall Street a lot of times: the trend is your friend. A swing trader is going to be focusing on a trend, and that swing trader is going to try to ride the trend until they have a signal that that trend has broken, and then they're going to hop off the train, basically. And you know, when you see that trend changing, there's one thing that can happen. I mean, it can happen numerous times, but something you want to watch for is what's called the counter trend. And we will sort of get into this in a little bit, but a really quick kind of glance at the counter trend. What happens a lot of times before a trend breaks is participants in the market will test certain levels on a chart, will test certain levels in a price, and this will sort of be used to potentially shake out weary investors or investors who are sort of getting sick of upside or sick of downside. It's what's called, again, the counter trend.
Excellent. And then if you guys do have any questions on anything that Brent or I are saying, please drop them into the chat and we'll happily spend a little more time on it.
Cool.
Excellent. Moving forward. Go ahead.
All right. So just to contrast swing trading, day trading is not longer than 1 day. A day trader would likely never hold a position overnight. This is related to headline risk. And what happens with headline risk is basically there are, you know, a ton of news items in this world that could impact the stock, that could impact the market. It could be something like geopolitical stuff, you know, going on with Trump or North Korea, that kind of stuff. That's a major risk if you're holding a position overnight. If you have an investment and you're saying, hey, everything's going fine with my investment or my trade here, I really like this position, and then some very good or very bad news overnight comes out, the fundamentals of that investment pretty much mean nothing because the market is being being guided by a much bigger news item. One other important thing to know about day trading is that there will be, and swing trading also, there are brokerage requirements that include something like, you know, a minimum account investment, also margin requirements. For day trading, it'll usually be over $25,000 in your account. You have to have over $25,000 in your account to be a day trader. You'll also be required for margin requirements. About 4 times is sort of a general for day trading, and 2 times is pretty general for swing trading.
Excellent. So basically, those are all the type of things where your brokerage will you know, the people that you are executing those trades through, they're going to keep you very informed on those type of requirements. So we're not going to you know, dive into too many of the brokerage requirements that you'd have through swing trading and investing.
All right, so let's go over to the other side of the spectrum. If day trading is on the left side of your spectrum as far as a time frame, swing trading is rather in the middle. Investing is on the right side of the spectrum. Investor is not going to trade a position under a few weeks. So they're going to have a position for probably longer than a few weeks, and also sort of matching that spectrum, that from the left to the right movement. Fundamental research and information is all the way on the right side. Investors are going to be more prone to using fundamental research. Swing traders are going to use a little bit of fundamental, a little bit of technical, a little bit of what's called tape trading, tape reading, and pretty much day traders, they're pretty much all the way on the other side. They're looking at orders that are coming in and sort of the flow of orders coming in, and they're making their decisions off of the flow of orders coming in, and maybe like a little technical, maybe like a little fundamental.
So basically, if you're curious to what type of trader you are or what type of strategy you have, it has a lot to do with how long you're holding the stocks, how many trades you're executing per day or per week, and if you're just holding a position, you would be looked at more so as an investor.
Good little overview, Mike. Thanks.
Excellent. So what are the 4 questions that we should be asking ourselves to determine our time horizon?
Sure. So this is probably one of my favorite slides that we got here. We're going to go over these 4 questions, And after you answer these 4 questions, and like I would encourage people to try to do this as we're going through the slides here, you should be able to determine what kind of trader you are, what kind of investment horizon you have. So let's ask the first question. What is the size of your investment? How much do you have in your brokerage account? If you have over 25,000, you're definitely going to be a day trader. And something else to consider as you're sort of thinking about what the size of your investment is that if you have a smaller account, smaller in size, smaller in cash, something to be aware of is commission. So commission rate adjustments for day trading accounts, a lot of times brokerages will offer stuff like that. Sorry about that, ladies and gentlemen. Something to think about, without the adjustments, commissions can eat into your profit. If you are an investor, you don't have a ton of money in your account, and you are being charged $5 to $10 per trade, per buy or sell, what can happen is a lot of times is that if you had a profit and you have to sell, some of your profit might be eaten up by that commission. Let's go to the next one here, Mike.
You know, I hear that a lot. You know,
okay.
So sometimes, you know, as you know, a new trader or a new day trader, new swing trader, those things may be overlooked, and you could have a profitable trading year at the end, looking at the P&L, but you had to pay so much in commissions, it ended up turning into a negative year of trading. So make sure that you guys are aware of the different brokerages fees that you have, and depending on the amount of activity that you do, there are a lot of different packages that your brokerage can offer you.
Absolutely, different for swing traders, different for day traders, different for investors.
Absolutely, and I like to point out the fact that as you guys watch your CNBC or you know, tool around on the internet, you will see that there is no shortage of brokerages. So there is, you know, there's a lot of them that are competing for your service. So, you know, if you feel that you're not getting the best shake, then, you know, make sure to look around and see if someone else can help you out.
And we have a listener out there who's contributing. Thank you, Babu. Babu is saying that commissions from my broker seem to be related to the volume of shares traded also. Excellent point, Babu, and thanks for dropping it in. That is definitely the case. Also a very good little piece of information. Something else to consider as you're trying to determine your time horizon and thus sort of what kind of trader you're going to be, how much discretionary funding do you have? This is going to be closely related to that first one that we said, which is what is the size of your investment. But I'm sure if you have, you know, started making your way into investing and trading, you probably have heard a tip like this or a question like this before. As a person gets closer to retirement, they have less discretionary funding. Their funding, their investments, their cash is accounted for in more instances, meaning they don't have income coming in anymore. Maybe they have enough cash, you know, to live the rest of their life, but they're not going to be able to have a ton of wiggle room in what they want that spending to go for. If you are a younger person who, you know, don't know when you're going to retire, you still have a steady stream of income coming in, you don't know where your income is going to peak eventually, this is stuff to think about. You have more risk potential. You can take on more risk. You don't have, you know, a very allotted, how does that work? I'm trying to think of a good word here. You don't have like a, you know, an allotment of exactly where your cash needs to go. When somebody has more discretionary funding, again, they can take on more risk, and thus they can probably make some riskier investments.
Excellent, and that's and you know that is, you know, from what I'm hearing, kind of depending on what you're looking for. So if you're looking to retire in a year, probably won't have a ton of discretionary funding to be playing around with. If you are just getting started, or maybe you just have a trading account, then you know you have a lot more discretionary funding, if not all of it, in that trading account.
Right. Cool. Let's go to the question number 3 here. And again, be doing this as we're going through them. This is a good little practice. Number 3, are you more receptive to fundamental or behavioral information. And I put in the slide here, technical instead of behavioral. It's kind of the way you can think about it. If you find yourself doing research more closely strictly related to a company's business, a company's operations, a company's financial statements, and you're using all of this to come to some kind of valuation, you're probably going to be more of an investor. If you are somebody who is more receptive to price action in a chart, if you find yourself looking at charts more and you're more generally interested by looking at a chart than by looking at, a financial statement and an income statement, you're probably going to be a little bit on the shorter term side of things. You're probably more likely to be a swing trader or potentially a day trader. Does this one make sense?
Yes,
Mike?
absolutely.
Okay, cool. Mike does a good job of kind of being a buffer for me to make sure I'm not getting like too complex. So sometimes I'll hit him with like a little question to see if he sort of understands where I'm going with this stuff. It's usually a good signal that I am.
Absolutely.
Number 4.
And yeah, just as a reminder, guys, if any of this is confusing to you guys, or maybe something you want us to spend more time in, drop it in, and we'll happily break it down for you
on this webinar, or maybe we'll do another one. Who knows?
Absolutely.
We're really open to this stuff. Last question you should be asking as you're trying to determine your time horizon is, how often do you plan on doing a transaction? How often do you plan to be buying or selling? I think this is, basically what Babu was dropping in there. He was saying that his broker commission is a lot of times related to the volumes of shares that he's trading. If you plan on trading a couple times a month, or one time a month, or a couple times every couple months, you're probably more likely to be a longer term investor who's going to do something like buy and hold. If you plan on doing, a few trades a day, let's say 3 to 10 trades a day, you're probably going to be in line with a swing trader. If you're doing more than let's say 10 to 15 to 20 trades a day, you're going to need a day trading account through your broker. That's where we can kind of circle back up and think about how your commission might be eating into some of your profit. Very important one to add to this list.
Absolutely. And these 4 questions here are basic, 4 great questions that you should be thinking about as developing your strategy if you are someone that is newer to trading or investing, just kind of a checklist that you want to be running through as you are going about your day.
All righty. So why is this so important? Why is establishing a time horizon so important? So some people in the audience might scoff at this a little bit, but Jim Cramer, he is one of my favorite educators when it comes to Wall Street. I don't condone his investment recommendations, meaning like if he tells you to buy Google or Apple or whatever, I don't really go either way. I'm kind of neutral on his investment picks. However, the education that he provides is amazing. If you guys go back and read some of his earlier books, Confessions of a Trader, Real Money is another one. The education is just phenomenal. And one tenet of some of Cramer's education is never make a near-term trade a long-term investment. Emotion can come into a trade or an investment extremely easily. Who knows what happens, just like the example I was giving you before when we were talking about headline risk. You have an investment and you love this investment and this investment's kicking butt for you and you feel great about the company, and then the company cuts guidance or something in the industry that maybe doesn't even directly impact that company happens, and the stock gets hit and you're freaking out and you're going, oh my gosh, I don't know what to do. When you establish a time horizon, when you establish a price target, and I'm just going to scroll down a little bit here, you know what to do when things go haywire, when things get crazy and emotion comes into one of your investments. You have research that you've already done, you have notes that you've already taken, you can set price target for yourself, you can set a deadline for yourself as to when you want to get in or out of a stock. And again, you remove that emotion. Emotion has been a crazy detriment to a lot of traders out there. If you do good research, if you understand the time horizon that you're looking for, you can make sure that when things go crazy, you just look down at your notes and it's basically just like automatic motion. And we got a question coming in here.
A couple of them.
Okay, that's good. Mike's reading through them right now real quick.
Caesar, you know, it shouldn't depend on the money that you have in your account is how much commissions you're paying. It should just be related to the amount of activity that you're doing in the market. And
so Caesar's asking, he's saying he has an account that is over the requirement for day trading, which is $25,000. He said, how much commission should I pay per trade? So that is gonna be, I mean, are you like asking the question how much you should be paying? And Caesar's saying he makes about 20 trades per day. If you are a day trader who is making about 20 trades per day, you do have a day trading account, you shouldn't be paying much more than $1 for a trade. That would be crazy if you're paying over $1 per trade. More likely it's gonna be like on a matter of cents. And I don't know Caesar, I don't know all the brokerages. So I don't know how all of the brokerages day trading accounts work exactly. I'm giving you a blanket statement here. I'm generalizing for you. Caesar, if you want to chat a little bit more about this, we can do this. Just, I'll have Mike give you my contact info and we can maybe pitch some ideas on this. Do we have another question coming there, yep. Mike, also?
It looks like 2 more over on this side.
Okay, sweet. Hit me with the questions. Just read them off if you can.
Yep, for sure. So looks like small trader, Mun, thank you, a small trader, took a big loss when one of his swing trades, when he didn't have much experience, he takes full responsibility for it. But now he's very careful. What risk and reward ratios would be good for me?
Okay, so I'm gonna like give you sort of a specialized answer here based on, you know, what you just said, how you sort of got burned and now you're like very close, now you're like very careful about your trades. I would say that, let's see, I mean, if you have a risk reward ratio that's like 1.1 over 1 times, I mean, that is going to be beneficial. If you are sort of, you know, you're going to eventually get a profit from that. That's going to be pretty like risk averse, however. If you are a swing trader and you know, sort of got burned recently and you're very careful now, I would say look for something about 2 to 1 or 3 to 1. I think that's probably a pretty good risk reward for you.
Excellent. And thank you for that question, Mun. Should we set stop limits for profit and loss when we buy a stock so that we already have a set loss or profit target?
This is a really good question.
I actually
thank you.
Had the ability to hear some traders talk at a conference this weekend. I can't think the exact speaker that said this, but it was actually John Navarian or
John
Nigerian.
There you go.
From CNBC.
Yep.
So he said that he used to be a big fan of stop losses to make sure to control you know, his certain loss or win. And then he studied it over some time and he found that it actually lost him more money than not. So I think it's something that what you're going to have to do is you're going to have to take a sample set of your data. Every trader is going to be different.
There it is.
The risk that you can withstand is going to be a lot different than the risk myself or Brent can withstand. So, you know, is that a good thing? I don't know. Is it a bad thing? I don't know. You know, it's what defines you as a trader.
Yep.
So, you know, you got to figure out what it is that will work best for you. But great question.
Absolutely. Excellent question. I would say that it all depends on you, Anish. If you aren't actively watching your accounts throughout the day, I would recommend using stop limits. If you are somebody who can be actively watching their account all day, each day, to what Mike just said, I would probably recommend against that.
Great. That was exactly what I missed. So perfect.
No, you got it for sure. Okay, awesome. Any others? Thanks for all the questions, everyone.
Yeah. Appreciate it.
All right, so let's get back to our slides here.
Okay, so one thing that we didn't talk too much about is emotion.
Yeah.
So that's something that we all have to deal with and fight against. We can't fall in love with stocks.
Don't get married to a stock. It's just a piece of paper. It's not even a piece of paper anymore. It's just this digital thing. It's just a company. You're trying to make money from it. Don't get married to it.
Absolutely. And that's when you can really go backwards or start chasing some things that you should have never chased in the first place.
So Mike, I want to take just a super quick pause here from our presentation and just give people a little insight to what's going on over here on the right side of your screen. If you guys and gals have been noticing while we've been doing this, we haven't been utilizing Benzing Pro at all so far. We're going to do that in just a second, but just to kind of intro it, if you guys have been noticing, there's been things that have been populating into Benzing Pro over here on the right side of your screen. And this is actually like the real-time component. This is you're looking at it live. This is our live news feed. This is stuff that is breaking within just the last second or so. And this is how it works. A new headline comes in, you see it at the top of your newswire. As new items come in, those items get pushed down. You can do keyword searching in this. You can do ticker searching. You can use this to be up to speed on all the things that are impacting stocks for a given day.
Absolutely. And this tool is good for anyone that is a day trader, a swing trader, or even an investor. Anything that you want to know about a specific stock, you should be able to find in this platform at a very, very speedy and easy to use format.
And we just had another really good question here from Mun. He said, are there alerts featured on Benzing Pro platform? We have sound alerts, we have email alerts,
yep.
We also have desktop notifications. How you use this is if you have a ticker that you're watching, if you have an industry that you're watching, you can filter our feed and then you can assign whatever kind of alert you want to it. You can assign a sound alert. So if you have a watch list of all tech stocks, you can assign it a little glass sound, and anytime you hear a glass shattering, you know that a news item on a tech stock, for example, just came in. Super quick little overview there of alerts. Mike, let's jump back to, and again, this is like we're going to get into the juicy part of the presentation right now here. We're going to look at a couple examples, and we're also on Benzing Pro, and we're also going to give a little bit of insight on how you can identify trends, which is a very important part of being a swing trader. So Mike, scroll down on the next slide there over on our presentation. So how to identify trends. So Mike, as we're doing this, we're gonna use some examples here live. I want you to pull up a chart on Benzing Pro. How do you do that? And he's gonna.
I jumped ahead. I see you.
I'm okay with that. Don't worry about
Twitter. So what I did is I just searched in my news feed right here, Twitter TWTR, and I just have to click on that ticker symbol right there, or I could go to this details page, and then I have a chart right here.
Cool. So if you don't mind, I want to get a little fancier with our chart. So we have like our general chart right here. We also have a little bit more advanced charting, and click that button there, Mike. It's just kind of a nicer chart to look at. And our system over here, when you click on the details button, it does default to Apple. It's just kind of the most popular thing. Let's go to Twitter. And so as you're trying to identify trends, you can do a million things to identify a trend. There's all these tools and drawing patterns and et cetera, et cetera. Let's just start very, very, very basically and click over to the presentation real quick, Mike, because I just want to deliberately read these out loud. A couple good ways that I think you can start identifying trends. Start with a chart that is very zoomed out. You want to look at a chart that is like, we're looking at the daily chart, I think over here in Twitter, Mike. That's a good chart to start with. You know, basically look at like a full year's worth of trading. And when you look at that, we're going to start to sort of like zoom in from a wider chart. And as we're doing that zoomed in, I want you to be looking for sort of the outlying highs and lows, the more dramatic points in a chart. Why did, you know, the stock spike up there? Why did the stock dip down to here? And Mike's kind of highlighting a couple of them here. So let's use Twitter as a little bit of an example. So how would I be interpreting this chart if I was a technician, if I was a swing trader? So go back zoomed out a little bit more, Mike, keep going. So what I want you to notice here, and just sort of like squint your eyes a little bit and unfocus your eyes and look at this, what I'm gonna call a trend. Oh, what'd you do?
Try to
zoom. It's okay. Okay, so what I want people to be noticing here is, for the most part, over 2017, over the last 2 years, we're looking at about a 2.5-year chart here. Over the last 2 years or so, since about 2016, shares of Twitter have been pretty range bound, right? Meaning they haven't traded a ton higher than $20, and they haven't really traded a ton below, let's say, like $14 or so. So if you're trying to identify the trend in Twitter, this range boundness is suggesting that investors are pretty neutral in the stock. If you've heard the saying, the stock is trading sideways, that's what Twitter has been doing for about the last 2 years or so. And so let me just bring this back around. So a swing trader will employ a trend, and they will want to trade within that trend. So how a swing trader might be looking at Twitter right now is when that thing gets up toward 20 bucks or so, and look at what happened here. Mike just moused over this price action in July. Mike, I want you to mouse over right here. And then look at these two spikes right here, going back to July of 2016. When Twitter shares approached $20 and bulls tried to move shares of Twitter over $20, they were met with what's called a lot of resistance. There was a ton of sellers at that level for whatever reason. We don't really care about the reason. We are just picking up on some behavior that is happening in the marketplace, and that behavior happens to be, if Twitter shares get to $20, a lot of sellers come in. The same thing happens on the other side. When the stock moves down to about $14 or so, this is what's called support. When $14 came into play, there was a lot of investors who probably were going in their heads, man, when Twitter shares were around $14, I should have invested, but I didn't. When the stock hits that level again, you know they're going to take advantage of that sale, of that price, that, arguably cheaper price, and bid the stock higher, and shares are going to respond. This is kind of that back and forth that's going on. So if you're trading something that is range bound, remember the higher and the lower bounds. That's what you should be thinking about.
Excellent. And then so just to make it very clear, so
yep.
If I'm a trader and I see Twitter right around $14 to $15 in some of this little downward trend, that would be someone, if I was a day trader and I was looking, or swing trader, I would be wanting to purchase that, because from what I'm seeing here, it's looking like it's going to slowly, gradually start to climb back up to at least $18, say $20. Once I see Twitter around $20 or so, that would be when I would want, or even $17, $18 is when I would start to think about, could there be another downward trend coming?
Yes. How I want you to think about this is kind of a couple really specific words: tendency and precedent. When Twitter shares make it toward $20, there's a tendency that the stock will sell off. When Twitter shares move toward $14, there is something in the past, there's a precedent in the past that has shown people that when the stock gets around $14, it generally bounces. So an important part about swing trading that we mentioned was something called the counter trend. And what happens with the counter trend, and this is something that swing traders will employ, is as price action is happening, sometimes there is people who will be shaken out of a stock. Now, if you see a stock that is moving toward a level that has shown support or resistance previously, understand that not all of the investors that might want to get in or out of a position are going to do it at once. So, Mike, I want to practice what I was suggesting over here, and let's sort of like zoom in on this chart a little bit. I want you to zoom in to the chart until about, zoom into like May if you can. So can you keep zooming? Cool, you can keep zooming there. So Now go back over to the right side of your chart, because I wanted to highlight, keep going all the way over. There you go. Okay, stop right here. Okay, so here's an important part that I want everyone to consider. So remember I said to take note of the sort of dramatic outliers, the highs and the lows. Look what's happening recently in Twitter shares to the highs and the lows. So let's start over here in mid-August. Shares were about 1585 or so. Mike is moused over right now. What happened is the stock started moving higher. The stock came back down after hitting, let's say, over $17 or so. $17 resistance was tested. Some people started selling at that level. However, what happened when the stock got down to about 1650 or so, though, is that this test was successful, and what happened is people started buying the stock again. So this move that Mike is kind of moused over right now, he's right in the middle of it, that would be considered the counter trend. The near-term trend in Twitter over the last couple months or so has been higher. It marked this low a little bit under $16. The stock went higher. Bears tested that high. The high was successful, and the stock started moving higher. So what's important is something that's called higher highs, higher lows, and lower highs. So if you are in a bull trend, if a trend is moving higher, what you'll see is you'll see lows that are higher than the last low, and you're also going to see highs that are higher than the last high. So that's like a mouthful to say, Mike, but you know what happened right here at the end of August, that low was lower than this low that we've seen at the end of September. This is an uptrend. Same thing with the upside of the upbound, the higher bound of this. We've seen a high around, let's say, 1825 or so. When that counter trend reversed and the stock started moving higher, it broke out to a new high, and there you go, we have a higher high. That's another easy way that you can identify where the trend is right now.
Excellent.
Yeah, and Bob was saying, aren't you basically referring to support and resistance? Absolutely. That's absolutely what we're referring to. It is a huge part of being a swing trader, technicals, and identifying where the trend is. Let's take a look at a couple other examples. You got any questions on that walkthrough of Twitter chart, Mike?
Nope.
Cool.
I think that is kind of a funny way of looking at it, though, as well. You know, it is pretty much walking its way up.
There you go. Exactly right.
And then, I mean, looks like it's been a pretty consistent, pattern in Twitter here. Probably some bad tweets came out.
And it's like as you're zooming out, you can see where that near-term uptrend is kind of turning into, okay, well, actually, we're realizing, yes, it's trending higher right now, but it's trending higher within the bounds of this sideways movement that we have right now. Let's look at another example that I think people are going to like, and we didn't really see any change, in my opinion, in the trend of Twitter. It's still relatively range bound. However, let's have a look at Amazon here, and we are going to notice where it appears that the trend in Amazon changed. So Mike, do what happened last time. I want you to zoom out on the chart, and maybe go back to go to the start of 2016. You're pretty much there right now. Cool. So clearly Amazon had an amazing 2016 and amazing 2017. However, what happened, so look at all the higher highs and the higher lows that we're seeing here, Mike. You're seeing you're seeing a higher low there, you're seeing a higher low there, you're seeing a higher high there. Look at this level in October. You have a peak right there in October. The counter trend came down, tested, let's say like the 750 or so level. The move continued, the trend continued higher, and we hit another high at the beginning of July. After that high in the beginning of July, the thing that's notable is we did not see a higher high. That uptrend did not continue. Instead, what happened is we started seeing the lows that were lower than the prior lows. So look at, you have this low here in mid-June. Let's say that was around, let's call it 950 or so. When the stock tested that level again, it actually went lower, and by mid or beginning of August, we had a new low that was down around like 940 or so. Moving closer to October, that low moved closer to 930. So it appears that a trend has changed in Amazon here. If we're strictly looking at the chart, I'm not employing any fundamental information or anything like that. I'm strictly looking at the chart here.
And then Cesar has a question about volume related to trend.
Oh yeah, this is a really good one. So he's saying, does volume has anything to do with the trend? Absolutely. Volume, no matter what your strategy is, no matter if you're a day trader, a swing trader, an investor, volume is an indication of how much strength a move might have. If you see a move on low volume, it might just be because there isn't a ton of traders out there today. If you see a move with much more volume than normal, and that's the way you should compare it, Mike's highlighting it right now, the session volume versus the average daily volume, that's what you should be comparing it to. If you see that a move is happening on much heavier than normal volume, that should be for you a more meaningful move. It should be more impactful because there are more people that are interested in the trade. There are more people that are buying into that trade.
Great.
So great question, Cesar. I really appreciate that one.
And then another one from Babu.
Oh, sure.
So higher highs and lower lows, should that be an indication of a trend reversal?
So if you have, you're not quite there all the way yet, Babu. If you have a uptrend and you are seeing higher highs and higher lows, your uptrend is going to keep going higher. If you have an uptrend and you're seeing lower lows, that would indicate a trend reversal. Yes, I had to sort of like logic through how you were saying it there, but I think how you're thinking about Babu is correct. All right, let's just look at one more really, really quickly, and then we're gonna leave you for this week, ladies and gentlemen. Mike, again, pull up the more fancy chart. Okay, so what's going on here with GM? GM has had a heck of a fall, let's say.
Yeah.
So what's happening here? So what I want to highlight with this one is clearly pretty rather range bound in GM. And what's interesting about this chart is you're seeing sort of like different levels of the stock being range bound. So back to summer of 2016, the stock was pretty much caught in this channel between 32 and 30. It broke above that 32 level or so, and then started trading in a range between like $34 and $40. $38. What appears to have started happening in September is beginning of September, the stock moved over the upper bound of this channel that was leading us into 2017. There was resistance at the $38 level. As bulls pushed the stock over $38 level, more and more bulls started buying in. And it appears that we now have an uptrend in GM, and if you will zoom on just, like since September. What I want people to notice is we have here higher highs and higher lows. So right now we're at a pretty important level because it looks like GM is coming off of a high just over $48. It's sort of the price is sort of rounding down away from the $45 level. What you want to see here in GM, if you're a bull, is you want to see the stock bounce off of, you want to see it hold over $44, and you want to see the stock continue to move higher over $44. If the stock moves below $44, there isn't a ton of precedent between the $44 level and the $42 level. So what could happen is the price might test support at $42 pretty quickly. If $42 can hold, that's going to be a good sign for bulls. If the $42 level breaks, that's going to be a good sign for bears.
Awesome. Brent, really, really appreciate you coming onto the webinar and dropping some knowledge towards us.
I think that was probably one of the more like info-packed
absolutely
we've done, right?
Absolutely.
Ton of good stuff in there. Hope it didn't get too complex for anyone out there.
And so really appreciate all of you guys, tuning in to us, asking the great questions. We really appreciate that. If you guys do have some other questions or would like a one-on-one walkthrough of the platform, I would happily do that. So don't hesitate to reach out. And if you guys have any ideas on any topics or anything that you'd like to see us talk about, let us know as well.
And Bob was asking if there would be any follow-on webinars on this topic. So Mike kind of went over it really quickly at the beginning of the webinar. What we're doing is we're sort of going through this circuit of information, of educational presentations that we want to give you. And it starts pretty basic, Babu. It's like, how to research a stock, how to buy or sell a stock, like what should you actually do when you're considering buying and selling a stock. So we're sort of walking you through the circuit. It's going to get a little bit more complex each time. Right now, Babu, we don't have anything planned for a follow-on of swing trading, but like Mike was just saying, we are like super open to hearing your guys' ideas. So if this is something that you liked and you want to learn a little bit more about it, let us know. We'll consider that and we'll sort of put it into our rotation.
Absolutely. We had a few questions come in about different brokerage services and if you're a student, discounts. Absolutely. If you guys do trial the platform and you guys do like it, if you guys are whether a student or whatever brokerage you're using, make sure to just let us know. And we have a lot of different partnerships, so there are some discounts that can be applied on top of any other promotions as well.
Great to know. And Dennis, thanks for the question. We got one more question here. Dennis is asking if we'll do any webinars on day trading. It's something we've talked about in the past. It's a pretty complex thing, obviously. So I am sort of giving a little bit of a teaser here. We have a couple of excellent traders who are very close to Benzinga. One of them works right here in the Benzinga HQ. Joel Elkanen. We have another trader that we're very close with. His name is Dennis Dick, and what they host each morning is a show, a Benzinga sponsored hosted show. It's called Pre-Market Prep, and what happens, it runs from 8 a.m. to 9 a.m. Monday through Friday, that's Eastern time, and what happens is Joel and Dennis will go over the top news items for a day, and they will walk you through, like what I did a little bit today, they'll walk you through some of the important technical levels that are in play following news that's being important for today.
And yeah, just to add to that, to cut you off,
No, it's fine.
Brett and I, we try and position these to be as informative as possible, but try and stay on the very beginner side of things.
Yep.
The pre-market prep crew, they do an amazing job of making sure whether you're a beginner or an advanced trader that you're understanding what they're saying.
Yep.
So, in the morning, whether you could listen to this right now if you'd like, but in the morning around 8 a.m., all you got to do is sign in here and then just push play and it'll come across your speakers. I would highly recommend hopping in this chat room too.
Quite a community in the chat.
Absolutely. They are definitely passing around some
ideas, investment trade ideas,
things that they're hearing as well. So for sure, definitely check that out. And it is called the Pre-Market Prep radio show, and it's premarket.benzinga.com. You should be able to find it.
And why I brought Dennis, why I brought Pre-Market Prep up is because, like Mike said, we're sort of on the more basic, more like introductory education side. Dennis and Joel, they have, I think, over 30 or 40 years combined trading experience between them. We want to get them on one of these webinars. They would focus on day trading. So I'm teasing a little bit. We don't have any plans for when that kind of webinar would be happening, but I just wanted to tease it a little bit. And if you are interested, Dennis, I would definitely recommend checking out Pre-Market Prep.
Absolutely. Wealth of information. So I think we answered all the questions. Caesar, I don't have a string of the questions, so I apologize if I don't know what you're asking. What is it again, please?
Maybe is premarket.benzinga.com.
Sorry if that is not the answer. Really appreciate it though, guys. Don't want to take up too much more of your time. Guys and girls out there, from Detroit, feel free to shoot us an email or reach out to us directly. I'm dropping my email into the chat right now.
And there was, Mike's dropping his email into the chat. There was I forget who the user was. There was a listener out there who had a good question for me about brokerage accounts. Send Mike a hello. His email is mikemarshall@benzinga.com. Send him hello, and Mike will connect me with you, and we can figure out how to keep the conversation going.
Absolutely. So thank you guys very much, and see you guys hopefully all next week. Oh man, I'm just hitting all the wrong buttons.
What'd you do?
All right, see you guys next week. Thanks for joining us. Signing off from Detroit, Michigan. Enjoy your weekend.